and then boom, simply we can cash out on this amazing huge move. But actually this indicator indicated that the price is changing its momentum perfectly as well. We can open another position and make money.
Today I will reveal a very strong forex day trading strategy that I use for a few years already. Why I like this particular strategy? Because it is very adaptable with other tools. It is very reliable because it takes into account the way the market moves, and it can also make you a lot of money. Now, I personally tested the accuracy of this particular strategy, and trust me, it is pretty accurate. And this strategy basically revolves around one particular indicator. This particular indicator will show you in advance when the price momentum is shifting, how you should trade with it, and it will also give you an exact signal of when to enter into the trade. It revolves around one core indicator, which gives us the moving average of the price. It gives us the signal to entry, and you can combine it with variety of different tools. So without further ado, let's go right to our chart.
So now we are at our trading desk. Currently I'm on euro against the US dollar pair. So let's talk about how to execute this strategy. As I've told you before, this strategy is resolving around one particular indicator, and that indicator is called exponential moving average. So let's go to indicators, let's write exponential moving average, and for this strategy we actually need two exponential moving average lines, and this particular strategy is called exponential moving average crossover. So that means that we will have two different EMA lines, and when they will cross, they will give us an indication where to open, buy or sell positions and where the momentum is going. So in order to set this strategy up, we first of all need to have these two exponential moving indicators on our charts. Let's go to settings. So the first exponential moving average line, which will be shorter, should have the length of 8, and in terms of style, this will be the signal line. So it doesn't matter what will you choose, but I personally like it to be red because this will be a signal line. And if we're talking about the other line, we should go to settings and we should write an input of 14. So this will be a longer length EMA, and remember that moving averages means that they basically take previous candles. In this case, if we have an input of 14, that means that the blue line will take 14 previous candles of the price and it will devise a moving average, so basically average movement of the price. So let's talk about how to actually use it, and this is a simple example of how does it work. So if you remember, now we have two lines, and the red line is a signal line or a trigger line, whatever you want to call it. And basically this is a crossover strategy. So that means when the shorter term EMA, which is in this case the red line, crosses the blue line, the longer length EMA, that is a signal to open a position because the price is changing its momentum. So if the cross happens from the bottom, so the signal line comes from the bottom and pierces through the longer length EMA, that means that this is an indication to open a buy position. Boom, like this. And for example, if we have a crossover from the top to bottom, so the trigger line crosses from top to bottom, that means that over here we should open a sell position. And let's actually see how does it work in action. So if we go to this particular place right here, we can mark our support or resistance levels, it doesn't matter. And as you can see, here we had our first cross. Here I can see that we have a support level, and basically here we have a cross, and according to this strategy, here we should open sell position. Boom, so let's open a sell position, and as you can see, this would have worked perfectly because the price literally went downwards, and before that the price was heading upwards, so it seemed like it was an upwards movement, but actually this indicator indicated that the price is changing its momentum. The cross happened from top to bottom, we opened a sell position, and look at the size of this move that we could have potentially caught. Then we can move to see other crosses. Here we have another cross, so we can mark our resistance and support level. Here we obviously have the resistance level because here the price is being resisted. Then first of all the price breaks the resistance, and second of all we have our other EMA crossover, which is right here. It is behind these candlesticks, and we should open a buy position like this, and boom, as you can see, this worked perfectly as well. We can open another position and make money. And then again, after this we have yet another cross right here, and if we open a sell position on this particular cross, we can see right here that this is a perfect place to make money, and how actually powerful and accurate this indicator is. So this is the main part of this strategy, the crossover strategy, but there are things that you should know in order to use it properly, because without knowing these things you will not be able to properly make money, and it will not guarantee that you will get these accurate results. So first of all, not all signals are good. You have to understand that indicators they are providing you information based on the previous data, so that means that they cannot predict the future with certainty. So keep this in mind when you're trading, and same happens with some of these signals. As you can see right here, the signal happened from top to bottom. That means that we should have opened a sell position, but the price actually went upwards. And in this case we can introduce a rule that will minimize this risk and that it will not happen in the future for you. And this rule is never trade against the market structure. So first of all, if the market structure and the market trend is moving upwards, so we obviously have a upwards moving market, a bullish market, and market structure moves like this. We have an impulse, we have a retracement, impulse, retracement, impulse, retracement. So basically you get the idea, the whole structure is moving upwards. And if the structure is moving upwards, we have a bullish trend, but the cross happens from top to bottom, indicating that we should sell. We are never taking this position. So we are never trading against the market structure, and we are never taking this signal. We are only taking signals into the trend like this. So here we have another signal, and as you can see, if we would have opened our position right here, we can see that we could have caught around 70 pips. So this is the main rule surrounding this strategy, and the last thing that I want to talk about is how to properly use it, and the best way to use it is to combine it with support and resistance levels. So for example, over here we have a consolidation. We can mark our support level, we can mark our resistance level like this, boom. Here we can extend this support level, and basically, very simply, here we had the cross. So we can combine it with support and resistance levels. So first of all, we can see that the price broken this support level, and this is in itself an indication to open a sell position because the support level is broken. And now we also have this cross from top to bottom, indicating that again also this is a great position to open a sell position, and that's why we should open a sell position. Then we can move to other cross right here, and basically you can use it with different support and resistance tactics. So for example right here, usually it is best when the support or resistance level is broken. So for example over here we have a situation where basically I can see that we have a descending triangle, so the price is moving upwards and downwards within a triangle, and then over here we can see that we have a cross, but we are not opening a position yet. We are waiting for the price to break this support level, and boom, the support level is broken. We also have our cross, so that means we can open a sell position like this, and then boom, simply we can cash out on this amazing huge move. If you want to educate yourself more about trading in general, about strategies, about how to properly trade, leave that like button, subscribe, and see you in the next episode.